Welcome to the Week in Review, the show that brings you up to date on the week that was. Here are our top stories. RBI puts the brakes on monetary policy, Fortis loses the battle for Parkway, and Reliance Industries posts record profits, even as brokerages downgrade its stock. India's monetary policy went through a greater-than-expected tightening this week. On Tuesday, the RBI increased its policy rates as part of its efforts to control inflation. Along expected lines was the hike in the repo rate by 25 basis points to 5.75%. The surprise was the reverse repo, which was increased by 50 basis points to 4.5%. The repo is the rate at which the RBI lends to banks, while the reverse repo is the rate at which banks park their excess cash with the RBI. Also this week, Fortis Healthcare admitted defeat in the battle to control Singapore-based hospital chain Parkway. On Monday, it announced it was withdrawing from its bidding war with Malaysia's Khazanah. The move came after Khazanah offered to buy all of Parkway for a new high price of 3.95 Singapore dollars per share. Earlier, Fortis had offered to buy every Parkway share at 3.8. Fortis will now sell its 25% stake in Parkway for a profit of about 116 million Singapore dollars. Fortis chairman Malvinder Singh now says he's hunting for other acquisitions in Asia, armed with about $900 million in cash and a string line of credit. And in other news from the week, the government plans to make it easier to refinance power projects. It's looking at setting up a 50,000 crore debt fund that can raise long-term money more cheaply. At the heart of the proposed fund will be so-called takeout financing, which is expected to encourage long-term lending. The takeout system allows financial institutions like IIFCL to buy an existing loan off the books of a bank. And in corporate numbers, Reliance Industries posted record profits on Tuesday. Net profit for India's biggest company rose 32% to more than 4,800 crores. Revenues did even better, shooting up 85% to nearly 60,000. And RIL's profits were boosted by its oil and gas business. The company's gross refining margins recovered to $7.30 a barrel in the first quarter. In 2009's first quarter, those margins were at $6.80. And while RIL's profits are looking up, some brokerages are downgrading shares of the company. They predict a fall of between 20 and 39 rupees from their initial projections of the company's target price. The downgrade has been prompted by delays in ramping up gas output from RIL's KG Basin fields. And Blackberry users, watch out. The Home Ministry is once again threatening to shut down services for the smartphone. It says Blackberries are a potential security risk because the company RIM is not sharing information about its users. At present, Indian intelligence agencies cannot decrypt data sent on Blackberries. India has more than 400,000 Blackberry users, and RIM has partnered with Indian telecom operators to increase local services. And here are some corporate earnings in brief. HCL's net profit for the first quarter was up 23% to 238 crores. Revenue climbed to more than 1,300 crores, an increase of 16%. And motorcycle giant Hero Honda posted mixed numbers. Net profit fell 1.6% to 490 crores, but net sales climbed 12% to more than 4,000. Hero Honda has been hit by rising raw materials costs and a shortage of components. Those problems are expected to continue in the current quarter as well. And another auto major, Mahindra & Mahindra, raced past expectations this week. Net profit shot up 40% to 562 crores, and net sales climbed 21% to more than 5,000. Despite the positive numbers, Mahindra warned that inflation and rising interest rates were concerns in the current and future quarters. And that's all we have for you. Thanks for watching.